Looks like it's streaming now. Can somebody confirm? Can I get a screen and audio check in YouTube? All right, thank you. Hey, everybody. Hi. Uh, Technical glitch over here. And we have, of course, the thrill of it all is not knowing why, but that's life, as they say, and technology. Thanks, everybody, for visiting Trader Lab. I'm your host, Tom B. Let's try to get things rolling here. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the higher time frame, intermediate time frame, and I want to just go over it briefly because it set up our anticipation of today. What we had yesterday primarily was long trades. In the morning we opened. This price here, 56.58 quarter, is the retail price from this day. Now, this is auction market theory, and the idea of the auction is shopping. So a retail price on this down day, this was the retail price. And we closed down here. Day before yesterday, we opened, tested this price. If it's too low, we can go up. And our target up here, and those of you who follow the stream, this was our primary target. So yesterday, I'll get into yesterday, sorry. With the tech problems, my brain is I'm getting ahead and behind myself at the same time. That's unique. So this was too low, and this was the target for this day. So we hit the target up here. That's a wonderful experience. However, then, and we close up on the high. So on that idea was potentially higher. So what do? Well, we open lower yesterday, and we test this down here. Actually, on this day, we missed it by just a little bit. So we got it on this day, and then here, in the morning, it was rotational trade. So what's interesting about trading or having a trade plan, for me, in my time frame, I was trading outside in, so it's called mean reversion. Because with this open, what I needed to be thinking about was the possibility of coming lower, but the fact we didn't get under here, but we were rotational, gave me the idea that I would trade the short side until we came out above. And then I knew the possibility was to come back here to this, because this was the retail price here. This was too low on this day. We checked it here. We rotated around, and then we were coming back to check this. Now, what was very interesting about this was we didn't get to it, but we did get to the ETH high. And when I go over statistics, and this is all available in Trader Lab community, and if you're visiting in YouTube, there is a link down there. If you want to visit, there's no cost for that. Statistically, we have over a 90% probability of taking either the ETH high or low. If we take out the first 30 minutes high, we have a probability of taking out the first hour's high. All of these statistics are available. And then potentially to come back here. Well, we got to the ETH high, and one of the things that was important about the ETH high was there's a slug of liquidity been sitting there all morning. And there was no liquidity, and this is where order flow can help you, sitting up here. So the target then is the liquidity and the ETH high. So, or trade management. It takes you out. Now, the other part of it is, and nobody knows this till hindsight, when we failed up here, we came all the way down and closed on the low. And where did we close? Below here and below yesterday's retail price. So that sets up the possibility of lower today. And of course, just to make it fun, we gap lower. Now that sets up a couple of possibilities, and I post all this in TraderLab, and again, nobody knows what will happen. It's what might happen. So for me today, on the gap, we look for a couple of things. First of all, if you get a gap, especially a substantial one, we look for the possibility of what's called responsive selling. That means the shorts here take profits, and it's just potential. And then it's somewhere, and this is part of the thrill, I was looking for shorts to come back and take this out and potentially break out of this consolidations. That's my morning plan. And then come down in here someplace. And the someplace is also part of the thrill. It could be here, but there's going to be a lot of stops sitting under this low because we have longs in here. So it's kind of like this. The market goes up. There's stops under here. There's stops under here. There's stops under here. If the market goes down and we don't get here and take it out and stay under there, we can just take stops, come back in, and squeeze out the short. So nobody knows what it'll do. All we know is what it might do. So for me, the idea, again, was gap lower, not take any longs, get short, and target this for a potential substantial move. And the target would be here around 88.75 because it's high volume. And the other area primarily would be 50. If we come out here, then, and these are higher time frame targets, 55.50 would be on the hit parade. And it doesn't ever have to do it. It has to clear this. And if it doesn't do that, then, as they say la guerre. That's the higher time frame. And the idea of a higher time frame is subject to how you trade. And this is something in TraderLab, every trader has to kind of determine for themselves, what fractal or time frame are you trading? What I tried to do, and it's only because I don't like to be overly active because my risk is pretty constant. I like to try to get on the larger swings, 20, 30 points, 10, whatever the market offers, because my risk stays around 3 to 4 points. And depending on volatility, it might be a bit higher. So let's go take a look. This is the ETH volume point of control. This is the retail price. This, hold on, I got to turn some levels off here. Hold on, guys. There's some stuff here that's coming off in real time, and I don't want it on here because it'll confuse us. Hold on. Okay. 1 second. And thanks for visiting, guys. Apologies to our visitors in YouTube. We had technical challenges here. So this is the retail price from the ETH. You'll notice we checked it, and this is before the RTH open, and it's too high. So for me, if the market comes back, I'm going to be looking up here. If I get the buying, I'm going to be looking for shorts. Okay, so that's kind of where I'm at. Let's get into this. So now we open, and I don't take any longs. I'm just looking for shorts at this point. So let's talk about microstructures and market behavior. How do you align with something like this? I mean, how do we get an alignment? I was just looking at the chats. Guys, I can't see the chats here, and if there's a problem here with YouTube or Discord, let me know. Not sure what the problem was. So this is our RTH open. We get some early selling. Okay. This is the developing volume point of control. It starts at 0 at RTH open. It resets. So this is basically now the new developing volume point of control. And this is where the high volume is. So as the volume and the trade comes in, this is going to track the highest volume for the developing daily time frame. And this is called the session volume profile. So it's going to measure all the volume, and the yellow line measures all the volume. When we go down in quote time frame, fractals, or microstructure, the chart volume profile measures only what's visible on the chart. So if it's on here, it's measuring it. So right here, this is the high volume market. I get my sellers. There's more volume here. Now we're only in 2 seconds, 3 seconds. So this is not actionable. It's just like what's going on. So I label this. It's called the variable high volume node. And all I'm doing is tracking what's called VPOC migration. I did a webinar on it. It's interesting concept. It's nuanced and it's advanced. It is mostly usable for me. Well, in a directional move, it's always useful. When the open starts, it's one of the earliest pieces that we have to detect the valuation. And valuation is based on volume and price. So if price moves higher and there's more volume here, the language of the market is saying this might be, at the moment, too low. So I start tracking this. Now what happens? If this moves up and I reject it, then I can come down and test what was too low. Think shopping. This is like going to your store. Suppose this price is too low. It's a retail price, but the sellers aren't willing to sell it anymore. If you want to buy an S&P and now there's more volume here, you might not be able to buy an S&P down here. You have to pay this because volume and price are moving together. This is kind of a concept, you might say, of valuation. So as this thing is going along, I'm seeing value is moving higher, value is moving higher. Now, this is fluid. At any time, we can come down and check previous levels and go, yeah, that's still too low, bounce off, or we can come under one of these levels and not look back. So in trading, it's like maybe. So let's look. VPOC migration. Let's just keep looking at it. Now, my first level for a short is up here. So you know. So I don't have a trade here, and I don't have a long. I just have, I don't know. That's basically what you have in trading is maybe. So let's look. So here, I come up to my level. Let's look at this. And this is my first location for a short. Right here, I'm at my level. I see my exhaustion. I've got liquidity coming in the book. I get my seller here. I'm below this. This is microstructure, and this comes in. So right here is my short. Not here, here. So for me, I have the sellers below the buyers. I've got icebergs here. Now, when I came up to this, I was looking at it, but I'm not at a location, so I don't have a trade. So anyway, I have level here, and I have a level here. So this is where I got short. My stop went, actually, I put it up here, just in case we pop, and then off you go. So this is a valid structure for me. It was also my first stop of the day. That's just the way it is. So now I get a sweep here, and I'm still looking for shorts. So I have to look further up. Now, at the time, the full session VWAP was here, I believe. Can somebody confirm that? Because my full session VWAP moves around. So was it around 56.30, 334, around 836, 837? Trader Lab, can you guys give me a information on that. Yeah, okay, thanks. So for me, the next place to look for the short was here. So, and what I was thinking about, now I have to label this, by the way, variable high volume node. So what I was thinking about was, all right, I got pummeled, fine. That's part of trading. I don't sweat that. It's just a trade, you know. There's none of this. Nobody has the, well, I don't. You know, I don't have the crystal ball. We had the magic 8-ball, but we never had a crystal ball. So this is my next level. And what I'm thinking about is, since the market's only open 6 minutes, and my current VWAP for me is not usable at this point, for me, since I only want to get short, I'm coming back to a previous area that might be rejected. And I have liquidity comes in the book up here. So again, I'm going, well, I want to get short. And the problem with responsive buying is where, you know, and of course, it's always a problem in trading because it's random. So if I take a structured trade and I take a stop, you know, fine, next. This is the next area, and I see my liquidity coming in the book up on top and over in here. So I'm looking at this. I have a sweep, and then I get VPOC migration. So VPOC migration says value and price, remember shopping, are moving higher. It does not give me what you call a tremendous level of comfort because it's kind of like this army is marching forward. But I also know, based on my plan, that I anticipate covering and that potentially I'm going to come out the bottom. So that's my plan. And I'm sticking with it until it doesn't work. So this is the retail price. This is a variable high volume node. And if I get short up here, and this is thickening up at my location, I have to get scaled here, then here, and then looking for it to come out the bottom. This is a short. Same. Let's look at the structure here. And in the Trader Lab, we have a trade called VWAP to VPOC. And I'm using the same structured trade. I'm just using a different VWAP for it. That's all. Because the possibility is to come from this area, and there's my stacking, okay, to here, to there, and then either back to there or down here. For me, shorts only, so I don't deal with the longs at this point. Remember where I'm trying to go. If this is too high, and there's my liquidity, I'm looking for this. And if I can get under this swing, then any longs that are sitting in here, potentially, I can come here. And I notice the liquidity comes in the book right under here. So I'm looking at all this. Next target. So I'm thinking, I got you now. You know how it is. And I get under the opening swing low. So right here, everything is lovely. So I took a stop, right? The first short, and then I have that one. And now I'm going to take out. I'm going for this. Hold on one second. Sorry about that, guys. So this now is a variable high volume node. And when this shifts down here, I'm thinking, yeah, wonderful. It's all great. I'm sitting in the Barca Lounger and I'm looking for it to continue. And to me, this low, and I'm just going to throw this on here. Remember, this, I'm looking for it to break out because then it would be one of those mega moves, you know. Now, when I say looking, all I'm saying is that's my plan. And I know it doesn't have to do anything. So I know if I'm coming down here and I'm getting through these levels, that there's a ton of stops sitting under here. So my plan was to come under this, and then, you know, that was that. Now let's talk change. So here, coming down, and the VPOC migrates. There's two possibilities here. Always. One is it drops and we just keep going. The other one is we cross above, and this makes my teeth chatter because I know I can rotate outside. Let me show you. When we break down like this, this creates a this run across all this. There's no volume traded here. And then we pause and we rotate. So this is an auction right here. Too high, too low, retail. So when this comes down here, this is the retail price. And I know the following. If it's too high, I can just keep going because of this. Or if I come above what becomes the VPOC, I can rotate outside, and then it's mean reversion to come back here and fall out. Same reason I was getting short up above, I was coming back to these variable high volume nodes. So right here, not thrilled, but the market can counter rotate. It's not the end of the world. So where's the outside edge? There's one here, which is created by this. And then there's a high volume node here. And then there's an outside edge up here. So outside edges in the open. So I'm looking at this and I'm saying is, okay, I'm anticipating something called mean reversion. This is the mean. That's the highest volume, and call it the fair price here. Now, if the market rotates and we're in a downtrend at the moment, we can come outside and then come back. So my idea here was come outside, come back, fall out the bottom. So let's look at the behavior and let's look at change. And, you know, like everything, who knows? Here's outside and here's my return and looking for that. And I get this. And it's like, what happened? So, and I get VPOC migration. Now, right here, this is possibly a short to here, but the VPOC migration is a problem. So this was very dubious for me. I looked at this and I went, you know, let's see. What I did here is I took a short here and I was looking for this. So I put a short on here, I got out of my, actually, when it came above here, I got out, I just put it back on again. I took a stop there. So I took one at the overnight VPOC. I got my short here, covered it here, I should say. When it came up here, I covered and I just put it back out. I think it might have been too fast for me in the sense to process because of this. I might have been a little myopic. I don't think it was terrible, but with this in my face, I knew that this could be a problem, but when I got under it, I thought, well, okay, we can test this. And then either we come out or we're going to find our buyers again. Looking back at it, this right here was actually a problem here. But it didn't recognize it. I was too hung up in this. So it's not an error for me. It's just, I think I could have done better. That's all I can say. So now we start coming across. Variable high volume node is here. So this was too high. So I know this is too high, this is too low. So I need to see how we behave here. Do we just come outside and then come back here and then down here? Or do we just start motorboating through everybody? So now I have VPOC migration, VPOC migration, VPOC migration. Now there's a problem with the short. VPOC migration. So now I'm back in the responsive buying. However, we failed to take out that low. So I'm kind of thinking about it. I'm going, we may come back later but this is now not fitting for me. So I'll show you the long. So now I'm in a responsive mode, and I have a couple of things. At 9 a.m., we have something called the IB 30. So if we take out the first half hour's high or low, then there's a high probability we'll take out the first hour's high or low. And again, I am surprised, but I have to just adjust. So I'm just telling you, that's me. You know, I'm not saying I have the best plan on the planet. I'm just saying is I just try to get in alignment. And I tend to be, I don't try to pick highs and lows. I just try to get back in alignment. So I'll take a stop when context changes because it hasn't proven it to me. So I don't try to catch the falling knife or any of that. So I'll just get, if I get out of alignment, I typically, what happens to me is I take a stop and then I have to look and see, you know, if levels are getting violated, then I know something has changed. And then that's about it. So this is the first hour's high. And at 9:30 Central Time, that comes in. So I have a couple of trades here. I get my VPOC migration right here. It's now 9:30 right here. So this is the IB. I take the IB out. So that gives me what's called range extension, and I get VPOC migration. This is the new retail price. I have two ways I can trade this long. I can let it come out here and try to buy a pullback and come back here in continuation, or I can get long against this. This is more aggressive for continuation. Let's see what it does. Interesting, huh? So now, of course, so this is a potential long. Your stop's got to be under these sellers. Okay, these guys were absorbed. Look at this, 1,800 icebergs going off, 1,400, big buying going on in here. So that is absorption. If I pull back here and my sellers are being absorbed there, and there's my liquidity, so I'm combining order flow and the direction of the market and a structured trade, which is now triggered. Buyers are here, these guys. So all this is a possible long, and you're going, you know, to try to fill the gap, right? So here, we pull back outside. All these are potential longs, but once you fill the gap, then it's very dubious whether you want to fool around with this, because now the market's long. We get a buy sweep here. For me, the trade would be over. It's strictly from here to here. And now it's a matter of potentially looking at rotations back here or nothing. Buy sweep, liquidity, sellers, buyers try here. They can't get above. They can't regain this territory. Think of it that way. High volume is here. Let me just mark it for you so you can kind of see what this looks like. Now, subject to your plan, this could be a short. You would really have to be using order flow for this, because we didn't, this structure, you did not get away in here. So you would not have a trade here if you're using price action. If you're using order flow, you could. Your stop would have to be up here. So you would be able to do this if you could read order flow. If you're using the break here, you really wouldn't have a way in. It just broke away from it. And this is where you'd be going. So there'd be no trade here unless you already have an understanding of how to read this. You guys have questions? I think that's pretty much what I got at the moment. Yeah, you're welcome, Justin. Everybody takes stops. I don't, nobody likes it. I feel disappointed when I take a stop, but if I'm following my plan, it's over time, it works really well. Any individual trade, though, is random. So there's not, I've gotten way past having to be right. It's always a curiosity to me if this time something works and another time it doesn't. It's no different than, casinos. They deal the cards. Sometimes they win. Sometimes they pay the gamblers. I kind of look at it that way. And then I always go over my trades and I always review everything to try to see, did I make an error? Did I miss something? And being human does present problems because we have to hold a lot of stuff in our head. And if you get myopic, and I do, being human, you're going to make errors. We all make errors. So errors are part of being human. But it's one thing to miss something or just, whatever, context shifts or whatever it is. And that's one type of error. But bailing out of a trade, not taking a trade, moving your stop when it's not in your plan, that's kind of different stuff, That's more psychological. Other times it's just structural, maybe you don't see something or whatever. I don't classify them quite the same way, So this is, if you're taking this, you'd be going here. Now here's a little something else here. You see this? And you see this here? This is microstructure. And where the sellers take over is pretty much here and here. If we came back to it, which I think we did right here, that's a short there. And let me show you, because this time the structure, which didn't happen over here, you couldn't get it, but let me show you here. So for now, for me, and it's not a recommendation, it's all shorts. Let me try to show you this, because you're going to see what I showed you above. Got to get this opened up a bit more. Now, this is called the IBF. It's a structured trade. And what it is when we break below the IB, this is mean reversion. You can come here and you can come down to mid and VWAP. And you might say it's counter trend, right? Unless you think maybe we've just squeezed the shorts out and now we're going to get the longs. And that's subject to your plan. Now, for me, I just trade rotations. I don't, if I get lucky, and luck is part of this business, and the short I took this morning after taking the stop from the full session VWAP, if it came out that low of that consolidation, that would be like a home run. So and if it doesn't, that's life, That's just trading because it's random. Let me try to get this drawn for you.
ES sellers at 5,645.75.
Let me widen this out a little bit. So this is the structured trade for me called the IBF. And you'll notice if I put this box over this, it didn't retrace. Instead, I got the IBF, which is a valid trade. And in this configuration, you might consider a counter trend. Okay. Liquidity comes in and it sets up a short here. And all you're trying to do is get here and maybe come out this end. So let's see what it does. But you have to get risk neutral. And that would be here. Okay. Short to there. and then you're coming here and you'd be out, you'd scratch. It is counter trend, right? That's it. I don't have anything else right now. But that was the only one up in here, the only trade. So let's go see what happens now when we come back against this. And these are not trade recommendations. We have to see if we can get back in the range. And this is pretty aggressive buying, guys. This is aggressive. So I would say stay in park. Not a recommendation. I got to say, you got to trade your plan. We can test this and rotate down again. But what we had here is sellers on the gap fill, which set this whole thing up. And then once they're done, then it looks like we have a more initiative buying. So nothing more for me. Well, I'm getting a question regarding when liquidity is pulled. Yes. Well, there's two things with liquidity. We don't know what the intent is. So, for example, if liquidity comes in like this, that which sets that up, and this which sets this up, this which sets that up, and this, and now what happens here? We come down. And what we know here is that these sellers were absorbed. We have a sweep here, and you'll notice when we come back across, now I don't think we traded this. Let me look. No, not really. So this liquidity, so what was the purpose of this? Nobody knows for sure, but I always suspect that you don't know what the intention is, but were these guys putting this liquidity in here to press the market so they could get on the other side and accumulate positions and then pull to open the lid so the market goes up? That's a thing we don't know. By the way, there's our naked VPOC. I believe this is yesterday's. Yeah, this is our retail price from yesterday. If you were long, this would be your next target going up. The market's doing quite well considering everything. So this, subject to your plan, you might be done here also. So the thing with the liquidity is it's what happens. Do we trade into it and eat the liquidity up? Do they pull and lift the lid off the pot? Do they jump in and we see them here, press it down, and then they pull and flip? There's a good course in the Bookmap server on order flow and market mechanics in the sense of what does it mean? And it's not predictive because we don't know what the point is. Why are they doing this? And why? Look, there's nothing up here other than target, right to the tick. So if you were long, this would be your target. If you had taken a counter trend trade, you're only trying to come back here and maybe out here. So it's specifically a counter trend trade. But with this kind of buying, there's nothing more. I, at the moment, have nothing to do here because I don't have any trades now for this. This could be a fade, but when you have this kind of buying, you're really on the weak side. And it doesn't mean that it won't come back here because it can. Because this would be, if this is too high, then it can come back and check the current retail price. And it would be a reversion trade. Somebody was asking this morning about reversion. I've got a bunch of webinars I've done on reversion trading, and it would be like from here to there. But it's not a trade I would take because it's counter trend. But you can learn the behavior of the market by understanding what creates levels. This is what the auction's about. So, and again, I wouldn't be doing it. But I'm just saying is the possibility, and that's all you got here, in a vacuum, would be to go from there to there under the IB and then down here and maybe under here. So let's watch and just see what it does. It's not a trade recommendation because the trend is up here. So this would definitely be counter trend. So it's very aggressive. And also you would have to, when I trade counter trend, I'm pretty aggressive on trade management. It's not the same as alignment. So this is not aligned with the current direction or dominant side of the market, as you can see by these buyers. But the other side of this is there's longs in these legs. So unless we keep coming up, we can rotate. That's what I know. I don't know anything more than that. So if I'm taking counter trend, I'm looking for this and under here to get stops out. If I don't have a counter trend plan, then I don't have a trade. Was there news? So there was news, right? Thanks, Edgar. Oh, so there was some news, huh? Well, that's the thing about our environment today. It is news sensitive, and we have in the U.S. an administration that's very tweets and does all kinds of things, and so it's very frequent. And we have to be aware. So you always have to use stops, and you need a news feed so you know what's going on. Mine's turned off when I stream. Let's see what's going on here. Buy sweep, liquidity. So liquidity, buyers, they become sellers, 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 sweep, suggest rotation. We got to see what happens between these algos right here. And there's no way to predict anything because there's just no way. So here we have some buy icebergs going. Now, if this pulls, then and they flip, then they can push it higher. Otherwise, we're coming here and here and maybe lower. That's all I can tell you. So if I took this trade, it is a counter trend trade. So that's what I'm saying is it's doable, but it's aggressive, right? So we're looking for this, not a recommendation, and that, and then possibly out here because this is the outside edge. So this trade could be specifically just this. This would be your entry into the stops. And let's look over here. So if that was news-based, what time did that news come out, guys? You guys have a time? Because the market can come back where the auction was disrupted. I have no idea. But this would be the next area. Here, the IB, and then potentially out here or not. So now if you're short with this, it's just trade management. That's really what you're doing here. Nothing more than following your trade plan. But I see this as counter trend. Now, I don't know what will happen, but I can tell you when I take these kinds of trades, And I don't advise or recommend anybody trade counter trend while they're developing. Stay in alignment with the dominant side. Now, in this situation, since we filled the gap and we tested this key level, this one, if it's too high, then the market, think of it how this works. If the auction comes to a price that was a retail yesterday and it might be too high, then where might I come? Back here, because this is the current retail price. Is it too low? If it's not too low, I can come under it and come out here and maybe whatever. After that, it's, we'll see. We got let's see what we got here. So really, there's really nothing going on here other than this counter trend short. Now, when I mention these trades, it's very important that as a developing trader, now here's some liquidity. Look at this. Now we want to let's watch this liquidity. We want to see the reaction. This is our target, by the way. So we had the IB and we have this. This is a price check. Is this too low or is that too high? This is the auction. Now, at the moment, this is too high. So now, where do we stand on this? Is this too low? And we're going to come back and take this out and continue to here, which is possible. So we have value area high from yesterday. This is where 70% of the volume took place yesterday. We're inside of the fair price. We tested the highest volume, which is there, maybe too high. If I get over that, I'm looking at this. If I can't get over this, I'm looking at this. You see? If this, then that. If not, then what? 11:10, my time? Is that right? Okay, thank you. All right. So this is an important area. We have to watch. This might be the extent of it, and it's very much trade management now. What I was starting to say is about trade plans. I always suggest that developing traders pick a side and try to stay with one side and not trade these rotations. So in the morning for me, and I would suspect for developing traders, you go with what appears to be the dominant side. When it changes and you can recognize change, then you turn around and you go with the other side. If this is a counter trend trade, then maybe this is not your trade. But here's what's important about this trade. So now, how do you handle this? If this is too high, then we can check what's retail right there. That's what I know based on how the auction tends to behave. I don't know if I'm going to get under here. I have the mid, the VWAP, and I can anticipate retail trader behavior here, right here, buyers. Now, if I get buyers and I have a sweep, I can get a rotation. Now, so another consideration is if you got short, while this is a primary target and to get stops here, we can also get buying here and then continue higher back here. If not, then we can come under here and blow out these guys and start picking off the trailing stops. So let's see what happens down here. Notice what we did. Did we get this? I don't think so. So there's going to be stops under here. So we got to watch the behavior now. Very important what happens in here. For me, I'm just managing my short if I was short. That's all there is to this. I cannot do anything more than take trades that I have, that are my trades. And if these aren't your trades, then it doesn't mean anything. It means you need to survive in this business. And in my opinion, you need to develop one trade that you can execute. Because if you have one trade, you need to understand the condition of the market, the context. You need to know where it shows up so you can anticipate it. You need to have a triggering structure so you know how to enter. You need to know where your stop goes and what the minimum requirements are so you can get risk neutral. That's a minimum of a 2-lot configuration. And you also need trade management and understand how the market works. So potential targeting, which was this. See. And then it's whatever, right? Because it's random. That's what you need. So you need one trade. Why would you only want one? Because if you can't do one, you won't do any. And most of us are in a big hurry. I'm just saying it's FOMO. You know, oh, I want 10 setups. And that's what? So you can keep busy? No, you need one that becomes yours. Because if you can understand one structured trade, or any trade, doesn't have to be Trader Lab trades, but I think it'll save you a lot of time, and you vet it, that means you find out it has a statistical edge, then your job is to execute it when it shows up. And that creates a template of process, because now you can build a plan. And there's a lot of pieces that come into the plan, not only the trades, but the condition of the market that qualifies the trades. And you would know if you took this that you're fading, okay? And if that's too high, this is where it might go. And then if we get below here, it could do anything, of course, we can come outside. If we can't get under here, we can come back outside this way. That's why if you took a short, you go in here, and then helmet. And that's all there is to this, because it's random. I do know this is important, and I know there's stops under the mid and the VWAP. So for me, I'm okay leaving a stop out here, outside, to get these guys out, because there's sell stops under here. Now, if we don't take it, that's very powerful, because that's saying it's really strong. If the market can't get to where the stops are, and look at the liquidity coming in. So let's see what's going to happen here. Okay, just going to keep an eye on it now. You guys have questions? How are we doing in YouTube? Please give a like. Hope you like this. How are we doing in YouTube? You guys doing all right? So for me, I'm okay with this, but I also am trading the auction. So I know, and let's look at where the levels come from, because it's pretty important to understand how this thing works. This was the retail price from yesterday. And what sets me up for the shorts to come out here was the fact that we couldn't get here. And unless we come back here, and get up here, this is too high. This is yesterday's retail price, and it's around 71.50. That's the current high of the day, right? Maybe I'm losing my mind here. Let me see. $71.50. 71.50. 71.50. That's the auction. So I know if I get here and I didn't make it up above to the other price, that I can look at selling it this price. This is the 71.50, and then I can just rotate in here. Or if I get back under here, I can still come back down. What I know, and this is what set up the idea of coming out here, was we didn't get here. Too high. What did we do here? Too high. I'm not paying that. What about here? I'm not paying that. What about here? Open lower, and now back here. I'm not paying that. Now, if I get through here, then all this goes out the window, and that's that. If I can't get through here, then I can continue back down somewhere, Because now what do we have? We have longs in the market, and the market goes up to go down, and goes down to go up. And if this is too high, we go up to go down somewhere. Let's see how it plays out. And you can just think about this as we progress through the day. Market mechanics. And let's remember, we don't predict. If you can predict, come to Trader Lab, clue us in. But in the meantime, we have to follow the participant behavior and attempt to interpret it. So the auction and using a volume profile gives us a lot of information that other retail traders just don't understand. And we're all going to take stops. Casinos pay the gamblers. There's overhead and cost of production. I'd certainly like to never pay a bill again in my life, but fact is we pay. And so do casinos. But they only play games and have an edge. And that's what's really important to understand about this business, is that the outcome of any individual interaction is random. And you can tell there's a lot of variables that come into this. Tweets, reports, we have FOMC tomorrow. We got all kinds of stuff going on. So all of these things can impact pricing. So the market's going to go to different levels, auction those levels, and then determine what might be too high. And I say might because it might not be too high. This might be too low, which is, you see. So if this is too low, I can come back and check what was too high. So it's sort of is that too low? Then is that too high? If I get under this, then I can come further outside. That's what I know. Other than that, I don't know what it'll do. So then it's trade management. Let's look at the bracketing here. What does this do? Does it pull? That opens the hatch. Or does it stay in the book? Or do they add? But let's just watch what happens here. So this is an algo, okay? And this is the limit order book. So you've got algorithmic behavior. Notice, just watch the reaction to it. And algos are, you don't know what the intent is. Is it to push this down so they can buy? Or is it genuinely, if they're short from here and maybe up higher, are they trying to push it down and they're going to pull this? I mean, you don't know, right? So I never know, and I don't try to know. What I look at is a combination of elements. I have this, so let's watch this, and then I have a buy sweep here. If I can't get above this, then the possibility is to come down here. So I don't know. So I got to watch if this liquidity pulls and I'm sitting in a position, I have to give serious consideration based on my plan. And you have to vet this, whether I exit stage left and I don't wait. Especially if this pulls and you see this come up, then it's a put. So let's see what it does here. You could tell an algo just by the bracketing of it, the flashing both ways. So this is the same player. See the pull? Let's see. So we got to see. Does this keep coming down? And what happens underneath us here? You see? Let's watch this. And this can flip right around. A big chunk can come in right here, and this pulls, then it's going to go the other way on a short-term basis. So let's just keep an eye on that, okay? Yeah, Ben, IBF already happened. And actually, the short Ben was up at the naked VPOC. And it's counter trend. This is where the short was, here. And then the next opportunity was here. I believe. I don't remember. I was talking about it, but I can't remember anymore. Since I'm not actually trading this, I don't have I don't know. I believe it was here, though, guys, right? I can't remember. How about a thumb up? We appreciate it if you're following this in YouTube. Um, I don't know if I'm going to post this one because of the big gap in the beginning. So it might only be in TraderLab and not out in YouTube world. Um, so if you're interested in this, you might want to just grab the link. I don't anticipate it being available. You know, when it comes to trading, sometimes, you put a trade on and it's just like, you just got to hang out and wait. It's like a fine wine. So this is our bracket. So if this is going lower, we've got to get under here. And there's still stops here. So unless we blast through the top, which it can do, I'm anticipating that we're going to get here. And then after that, you got to see, whatever. And if it doesn't do it, it doesn't do it. But here's our bracket. The way this works is this sets up that. That here sets up the rotation here. See? They're pulling, right? This sets up a rotation here. Notice this pulled. This pulled. And that pulled. So that's algorithmic. That's a bracketing algo. Nothing to do with that. If one stayed and the other pulled, that helps you out. If they both pull, then nothing that I can do with it. And now it's up for grabs, really. It can go either way. I know there's stops under here. That gives me a bit of an inclination to still want to be on the short side to get these guys out because of retail trader behavior. But this is counter trend, So we're outside of yesterday's range again, and we still have the naked VPOC above us. That was too high. It does suggest possibility to come lower, but it is a counter trend. So you just follow your trade plan, and you trail your stops, you do your thing, and whatever happens, happens. The microstructure is up here and over here. And there. So this is an outside edge. It's a low volume node in the microstructure. This is the fair price, and we can rotate now. And I know there's stops under here. That's all I can tell you about this, because the rest of it is just trade management. You guys have questions? AEPS, as far as the overall daily volume, I kind of look at it more in the sense of, is a higher time frame participant in here, or is it like yesterday was just really short-term traders? It was just, there was no, nothing really going on in there yesterday in the sense of it was retail traders trading against each other. So that's what created the early rotations. Today, based on the move, we have higher time frame participants in here. So there's going to be more volume today. I don't really look at the volume in the sense of it's the volume at price. So with the profile, what we're looking at is the activity of the participants. This is the sellers are here, and the locations. So I kind of look at horizontal volume, not vertical volume, if that makes sense to you. Does that make sense? And as far as the weekly value area, I do not, because that's time based. So the week, for example, my micro composites are not made up of time, they are made up of auction. So here, this is where we found our buyers, and that's where I found our sellers. And then yesterday was inside. So what I'm always doing is I'm just interested in the area I'm trading. And down here, I found my buyers and I had my sellers. I hit this location here, which was a target on this day. Once we broke above it and we tested it, and actually I was thinking it would maybe come over here, didn't get there. So this is a test, an outside edge, and then, once we rejected this, I used this for my intermediate time frame. And now there's no right way to do anything in trading. It's what you need individually to see. So I'm only looking at this because this is what I'm trading right now. That, and this. So that's why I was rather enthusiastic to get under here to get these stops out under this swing, you see. So I look at swings, there's no time. It's just structure. Hope that answers your question. The auction is not based on the clock. It is based on participant behavior. So the interest for me, and I used to do all that, it's like we all do the same stuff. Everything was time because that's all we had. And once volume became available, all prices are not created equal, and the week has nothing to do with it. So value areas, you just have to use what speaks to you. I can't say there's a right or wrong. I don't have an opinion on right and wrong. I have an opinion on edge, and I have an opinion on results not being right or being rigid. So that's part of your research. And I'm sure there's other traders who use weekly, whatever they're using. But for me, if I'm trading inside the last 3 days, what happened for the full week is not material. So this is our targeting was to get the stops under here. Now it's going to be very important right here because we're at an outside edge. So here's what can happen here. First of all, we can keep going. But the next possibility is to come right there. Not a recommendation. There's no range for this. So we have a sell sweep. We got our stops coming out. And now we can either come here or keep going. So I guess the short is doing all right, but we have to be very conscious now. This is called mean reversion. If we come outside, we can come here. And it's not a long, unless that's in your plan. And for me, it would just, if I come across here, then I can come out here. And then we could do one of these moves. That's also reversion trading. So let's just watch the behavior. Liquidity in the book, liquidity up here. Let's watch. So now we're looking for this. Now this is not a trade I would take. I'm not, and I don't call trades. It might be the perfect trade, right? Well, I kind of look at this a few different ways. One is I look at that the retail traders keep their stops under the mid and the VWAP. I also know this was absorbed because the buyers are above this. I know if I come across here, I can go there. That's what I know. Is this a trade I'm going to take? No. But it might be the best trade on the planet. Because if this is doable, it would go from there to there, and then you got to see if it's doable. But I have no long. I just have nothing to do. I kind of get on one side, and then I just hope for the best, manage my trade, and do whatever. Whatever happens, happens. There's no prediction in the business, It's really alignment and then probabilities. I know for me, if I get out of alignment and the market runs away and I feel FOMO, where we come, right? Here. And if I feel FOMO, I just get very patient because that's cost me a lot over the years. So I go, well, isn't that interesting? You know, I take it in and I go, okay, where's my next trade? And if I don't have another trade, I just wait until I do because another trade will show up. They're like buses, you know? And for me, the idea is not activity, it's intentionality. So, you know, in Trader Lab, some traders are going to buy near the low and get out when we fill the gap or whatever it is, or get to that naked V punk. For me, if I don't get that trade and I get off sides, then I have to just wait. And then I wait. And if a trade doesn't show up for the rest of the day, I have nothing to do. I'm not here to gamble. I'm here to take risk with edge. And I still am going to take stops because we all have to take stops. That's why you use a stop. It's risk management. And that's another reason why you only take trades that have edge. And if an edge doesn't show up, you don't have a trade. Yeah. Casinos don't make their games up, you know. This is an outside edge, low volume node. The tendency of these things is to come back across, but it doesn't have to. And if it does come back here, that's called mean reversion. And just to keep you a little off center, I'm going to hold on one second. Now this will get you because this is now fractal. It's a bit advanced. This is the mean from yesterday. We reverted to it. If it's too high, we can revert to this mean. If it's retail, I can come outside to an outside edge and revert to it from this side. That's also mean reversion. So if that's too high, I can come here. If I come outside, I can rotate here. That's what I know. And I don't necessarily take these trades like this. This is right here is potential. This is support. This is the target. Let's see what it does. And it's not a trade recommendation. Why would it be an outside edge? Because if this is too low, which nobody knows, I can come back, check this. So let's see what it does. It's not a trade recommendation. Everybody takes stops. Nobody knows. Got to watch these guys right here. This was absorption. So if we come out here, you want to see if these buyers show up again. And we can dip under here and come right back. So when you guys are thinking about stop placement, it might be an idea not to put it right there. Because if we pop into some stops under here, the buyers who were here might activate again. So you have to be aware of that. And it looks, yeah, we're still heading lower. We're falling out of this distribution. So we have to see what happens now. So there's nothing to do here. Still the short. So the possibility was to come from here to there. And if you don't, that gives you a lot of information. This is where the absorption was. And now we're below these buyers. They're in trouble. So let's see what happens if we come back to it. This now can act as resistance. This. Let's see. Right there. So we want to see if we get behavior right here. And this is a structure in the Trader Lab. It's an advanced structure. I don't go into this too much, but this here is where your buyers were. And they got run over. So this is an important level now. It's a form of resistance for continuation lower. Let's just see what it does. None of these are trade recommendations. Anything can happen. We're outside of this consolidation, which is what this is, all this volume. We fell outside of this outside edge, which sets up the mean reversion, which failed. So then this outside edge becomes resistance, and this is a potential area to interact if it's in your trade plan. This says counter rotation, sweep. So we can get one of these. Let's see what it does. Hope you're getting something out of this today. This is the outside edge right up in here. And this is your sweep. So this suggests a rotation. If we don't get it, that is also suggesting lower. So the outside edge is up here. So we'll see what it does. And you guys can follow this. If it doesn't take this out, then we have more downside. Potentially. Please give a like if you're visiting in YouTube. By the way, if you are visiting in YouTube, there's a link down there. If you're interested in the Bookmap Discord Trader Lab community, there's no cost for it. All you got to do is confirm your Discord email, or the email that you have assigned to your Discord if you have that, and there's no cost. And it's a community of traders. Let's see what happens right up here. This is our sweep that suggests a rotation. Then we really want to be looking here, really, to see if we can hold below this. Because the buyers were here and they got thrown under the bus. So then that becomes your outside here. So we'll see what we can do. So this behavior is very important. I'm seeing the aggressors here. I'm seeing delta. Seeing a lot of good buying here. This is our area, this. Oh, looks like we're going to back. Can't tell. I can't read it. Other than I'm seeing aggressors back in here, and I had my sweep. We're above this. So that's this trade, my short, if I was holding my short, would be done. And it's because of this. Because right here, the buyers failed, and this becomes resistance right above here. Sweep says put a helmet on, and this breaks above here, the trade would be over. And that would be the end of that one for me from up at the naked V pawn. That's just me, and it's not a recommendation. You got to, follow your own plan. But the short was from there. Well, I'm okay with that. Or no, I couldn't get in there. I'm sorry. I wouldn't have been able to get in there. But that's where the short set up, and then you'd have to get in where you have a rotation and a trigger. I think it was here, but I don't remember. Final questions, guys? Well, if you hit your loss limit, Ben, which anybody who's in this business will do, then that's why we have loss limits. And you just come back to a day that's aligned with your plan. That's all there is to this. If you have a plan that has an edge, the edge is going to come to you. it's going to be delivered to you by executing your plan. When your plan and the market are one zigging, the other zagging, that's it. You won't know until you hit that loss limit, and that's why everybody hits their loss limit. Everybody has losing days. It's just the way it works because it is random. So the way to stay in the business is not get hung up on, gee, I lost today or I'm in the hole, I got to make it back. That kind of behavior is what takes people out of the business. You really need to become detached and just follow your plan. How do you measure yourself in this business? I know most retail traders think of it as P&L, right? That's not how you measure yourself. You measure yourself by your plan, and if your plan has an edge that you have vetted, you know that by following the plan, the dollars come across the table to you, even though you pay the gamblers along the way. It's overhead and cost of production. So when your plan and the current market are not in alignment with ours or my specific plan, I wait until it is. And if it isn't, or I hit a loss limit, I'm done. I don't, it's just like, okay, tomorrow. It's detachment, not emotional. You can't stop feeling the emotions, but we all need to understand where the emotions fit and when they are actually counterproductive and destructive. So good for you, Ben, on having a loss limit. It's one of the biggest problems when you kind of lose, I mean, all of us, when we lose control, because we're not following a plan, then we are gambling. And I always say, for all of us, if we're going to gamble, go to casino, get the cocktails and the ticket to the buffet. At least it's more rewarding that way, because at least you're gambling there. But don't gamble here. Don't gamble with your business. Please give a like. If you're interested in Trader Lab, use the link in the bottom of YouTube. Sorry about the technical issues today. Have no idea why that happened. And hopefully that won't happen again. And I look forward to seeing you guys tomorrow. Take care. Have a great day. Thanks for visiting Trader Lab. Use the link down there if you want to visit the lab. There's no cost. And also, please leave a like on the way out. Take care, everybody. Trade safe and follow a vetted trade plan. It's the best way to create sustainability.